Okay, guys, coming up shortly, we have the Bank of England rate decision that's going to take place, and we're going to go into the fundamentals and the technicals, and also wait for the announcement to take place and then react upon that news. Okay, so let's go through the fundamentals. Let's break down the economic calendar itself. So today, midday, we have the MPC official rate vote. This will be extremely important, guys. This will be extremely important. This is where we're going to see how many of them are hawkish, dovish, or they are neutral, as in they want to keep it unchanged. Previously, what we've had is two hawkish, and the rest wanted to keep the rates unchanged. Yep, so there was no doves, just two hawks, and the rest wanted to keep rates unchanged. Uh, and then you have the monetary policy summary, which will be a statement released from the Bank of England website. In addition to that, the main key data that we want to view is this one here, which is the official bank rate. So the official bank rate currently is at 0.5%. Yeah, so 0.5%. Okay, so this is less important. This is also less important. What is more important will be the bank vote. I'll go into the reasoning behind that. Okay, so um, what you're going to have is the Bank of England, they're going to announce their monetary policy decision, which is whether they keep the rates. Whether they keep the rates unchanged or they're going to raise rates. The anticipation at the beginning of the year was to raise rates. Yeah. But the first quarter micro data came out quite poor. So we had very poor micro data, along with some poor weather conditions, the retail sector slumping. So therefore, the Bank of England held the rates and they kept them unchanged. So since then, there has been a continuation in regards to poor data. So we've seen mixed data coming through. So there have been some positives, such as retail sales. The most recent one has been positive. It beat the forecast, which is at 0.5% up to 1.4%. So that was a smash of a result. But overall, if you look at a number of micro data results that's taken place recently, it's been more bearish, so more negative, or a mixed bag. Yep. So this event is expected to be a non-event. Non-event meaning that we're not expecting to see a significant move to take place. So what I would say is the fact that traders, their view won't be on the rate decision because this will be kept the same. This is expected to be kept the same. So that is not what traders will be viewing. The two areas that they will be viewing is potentially the statement itself. So when that statement's released at midday, I would be on the website and go through the website, go through that statement and look for key specific hawkish or dovish comments. But in addition to that, the most important will be is the bank vote. Yep, so the bank rate vote. So if we see recently, so previously we've had, okay, two hawks and the rest wanting to keep rates unchanged. But if we see a 6-3, so if we see 6 on this side and 3 on this side, and obviously doves being 0, so if we see a 6-3 vote, that could lead to a large move. So that could lead to a large move. Yep. So what I'm looking for is this key point over here. Is the rates will be, if the rates are unchanged and we see a 2-7 vote, we're not expecting this will be a non-event and not much movement taking place in the market. If we see rates are unchanged, but we have more of a hawkish summary on their statement, as well as a 3-6 vote, then that will be seen as more positive, or we might see sterling rally on this. Those are the two perceptions. But if we see within the statement itself that they are still concerned in regards to inflation is a big issue for them. average hourly earnings has also been a concern for them. Unemployment has been at the lowest for many years, so that's not a concern for them. But yes, inflation, consumer growth, retail sector, along with the average hourly earnings are the key indicators that they will be looking at. Yep. So that's what I'll be concerned about in regards to the news that's being released. That's the fundamentals. Now let's switch over to the technicals. So if I just go to the technicals. So the main chart that I'll be looking at is cable. So we'll be focusing on cable. You could look at Euro Sterling. You could look at Sterling Yen. So any of those cross pairs if you like. But my main chart that I'll be focusing on is cable. If you are trading on a much shorter time frame, the 5 minute, the 1 minute time frames, then yes, you would want to do a multi sort of chart analysis of all of those cross currency pairs and look for the one that's doing currency strength, using currency strength to find the strongest and the weakest and pairing the correct two together. So we do have a couple of minutes still. So recently we've seen this uptrend. This is your what we will say, okay, Brexit. So that was your Brexit. The significant sell-off that took place that just continued more and more selling pressure. We had some dead cat bounce, so some short-term rallies that did take place, but the low has been the 121. The low has been on average the 121. Thereafter, we've had this significant uptrend taking place as the economic condition had stabilized and started to become better, as well as the Brexit fear had been subdued. Yep. Now, so when we reach this sort of high of 144, 143, uh, uh, the anticipation was a continuation of a rate rise. But as I've earlier suggested, is that we had poor results. So micro data that was being released led to this significant sell-off. So the sell-off that we're seeing is this is coming through poor macro data. On a weekly basis that led to this significant sell-off all the way through. In addition to that, there were areas where we had central bank, so the BOE, Mark Carney stating that there are no rush to raise rates either. So straight away, more of a dovish tone taking place that led to this sell-off. So when we had the initial rate decision previous to this, which was this area here, that was a non-event, so we didn't have a significant move. But thereafter, a continuation of bearish microdata has led to more of a sell-off. Yep. In addition to this, we've seen the opposite of this. You've always got to look at the currency pair. It's a pair, so not just focus on sterling, but also focus on dollar. So we've seen dollar rally. The dollar index, the DXY, has crossed through the 95 handle that it has been testing in the last couple of weeks. Okay, so recently my main concern will be is, okay guys, it has stayed unchanged, so the rates have kept unchanged. So what I'll okay, so let me just drop down to a lower time frame, delete some of this analysis, going down to the what let's and now it's coming up here. So if I drop to a 15-minute time frame, okay, so now we're on a 15-minute time frame, guys. So why do we see a rally here, guys? Exactly what I just spoke about. Okay, well, the rates remained unchanged. So the rates remained unchanged. But the key anticipation, as I expected, was there was more hawkish sentiment between the MPC members. So there are 13 MPC members, and we've got a three of them are voting. Sorry, 9 NPC members. So three of them voted more hawkish. The remainder six wanted to keep it unchanged. So that sentiment shift has started to change. So we're starting to see now that the NPC members are becoming more bullish. Yep, and that's what led to this significant rise over here, guys. So now we've tested the lows of the 131. So price action was hovering around the 131 handle, and now we've broke through, testing almost the 132 handle.